Today, we're going to talk about. We're doing a little prediction here. Sorry, I don't have anything prepared. I'm just gonna wing it. It's my little freestyle. So, from previous all time highs, we have put up about 625 points higher. Interesting. We're maintaining this green is a channel, and it looks like we're maintaining the parabolic gap. So everything above here is technically overbought, obviously, but these are my favorite trades. Why are these my favorite trades? Because things like this can happen, right? Things like this. So in this overbought territory, I get pretty aggressive. So you see this move right here? It's a strong breakout move. You see this consolidation. So we broke out of this consolidation. There's a chance we can put an identical leg right here. And so, sorry, if we go back to this leg, let's see how large it was. So I always go from the low to the high, and I consider this the high and not this, just because it, if you look at this, like, so this was the breakout, but then it continued into the after hours session, and so I'm going to consider this a legitimate high. If this pullback was deeper, like below here, then I would consider this the high, but because it was bought and a new high was formed near instantly, like, I don't consider this a top. But we're looking at about 6680 to 6782, so 100 points. And then we did an 82 to 41 pullback, 40 points. So these are good. So I like that. I'm getting 2 to 1. 2 to the upside and then 1 to the downside, right? So let's measure this one. 40 to the 80. So this was 60 points with like a near 50 point pullback. So I would measure from here another 100 points. So my target, and this is where Fibonacci's come into play. So if you did a Fibonacci extension right here, 100% extension from here would be 6840. So that's my new short-term high side target is 60. I'm sorry, I probably said all of those numbers wrong. So this is 100 points. 100 points from here is 6840. I don't know what I just said. I might have said that. But that's the new short-term target is 6840. Currently we're at 6777. I have a few long positions right now. The market opened up in Sunday night overnight futures. Looks like we've put up about 10 points right now. This is obviously the breakout zone, the 6780. We did not come and retest the low, which sucks because now there's a chance that we do. But you know, we can only play what the market gives us right now, and this gap up, I almost always play the overnight gaps, just because when they do gap, whenever they hold, like, I don't know if this will hold, but if this does hold, they usually go crazy. Um, it's whenever they open up and like stay at the previous close where it gets kind of what's the word? Consolidatory. That's funny. Where they, just tend to consolidate. Market makers tend to just rob people of premium, but I am playing this gap up. So I just wrote this down actually. I'll go ahead and go find that. But I think we're about to put in a very tricky scenario here. So you see, this is the breakout pullback, higher high pullback. I think we're gonna do that one more time. So I actually have it written down here. Let's see. So right here it says pump back to 68, dump back to 6750, and then an infinity pump back to 6800 plus. So what I mean by that is I think we're just essentially gonna put back in one of these little patterns. So the market loves to run in threes. So like here's 1, 2, and I think they're gonna do a third one. It's gonna catch somewhere around this 6760 to 6740 area, maybe even as low as 20, and then I think it's gonna rocket back up. And the reason, like, there's a lot of reasons why that's a very high probable scenario. One, because of 6800 being a round number. There's a lot of longs looking for the break of 6800. They're going to start positioning once that happens. It's a perfect time for shorts to go ahead and take a quick profit on them by dumping it off of the 6800. Like any load between here, between the 15 and the 40, is technically a bear trap entry. The market loves to pull those off. And sorry, excuse me. And just also just the fact that the market loves to run in threes, right? Here's an example. The market loves to run in threes. 1, 2, a third one before the reversal, right? And right here, we just know it wasn't a continuation because they should have dumped it right here. So right here, when it just 1, 2, 3, you your bull trap entries right up here, and then you dump it lower. They attempted to do that, but they ultimately failed. And so now we're looking for it on the other side is 1, 2, 3, right? Bear trap entry. And why I say that is like here, look. So off the first one, here's the first meltdown. Here's the dead cat bounce, right? So the perfect trap is above this level, which is this. That's why that was such a good short. And then they tried to attempt it again, but they never broke lower. So same idea here though, is 1, here's your it's not a dead cat, it's the opposite of one, right? But here's just like your bull pullback instead of a meltdown. It goes higher, pull back. I think it's gonna go higher one more time. This time pull all the way back here, and this is going to be your trap entry. That's what ideally would happen, in my opinion. That's just how you get the most money for your buck as a market maker. Now how we take advantage of that is like right now what I'm doing is I'm going to take a quick scalp up to 6,800. I'm going to sell it. I'm not going to I might position short. I don't like playing the position short whenever I ultimately lean bullish, but I might. And then I'm going to look to reload between 67.50 and this 67.15. Now, that's a huge range, I know. The problem is I don't know how low they'll go before they trap it. And also, I don't know if they will trap it, right? I'm looking for a turn of momentum, right? And a lot of times what they're going to do is they're going to fake the turn of momentum and just make the downside pattern much larger than what you expected. So that's why picking tops and bottom is so hard, because right when you think it is a turn of momentum, they just make the patterns so much larger. And that's where everyone kind of blames technical analysis because they're just like, man, it was supposed to do something right here. Like, true, if the pattern was that size. However, what they did actually is, because you're playing fractals, right? When you play patterns, you're playing fractals. What people don't understand is just because you see a pattern doesn't mean it's the right pattern for the fractal you're actually charting. Fractals can get larger and they can get smaller. And a lot of people don't realize that they're actually playing a larger fractal. So what I mean by that is, for example, that's a good example. Okay, so right here, this is a rising wedge. If you don't know what a rising wedge is, go Google it. But essentially, this is rising wedges are very profitable because they're very hard to guess the tops and bottoms. So in this case, this is a bullish rising wedge. It snaps right here. However, you see how it gets saved right here and continues? It's because it's actually a larger rising wedge. So most bears were seeing this and they were getting very, very bearish because they're like, oh, it's a rising wedge. When it snaps, it gets aggressive. And they're not wrong. They're 100% right. When it snaps, it gets aggressive. However, this is in fact just how they invalidated this short, no matter how aggressive it was, is they're making it larger. You see this? You see? They just make the fractal larger. They were focused on this. It's actually all of this. Now look, you see this downside? This looked crazy. But guess what? It's now, because of this move right here, it's now a larger rising wedge. And so what this essentially means is if I'm correct and this is just a larger rising wedge, oh, this has so much more room to go higher. Matter of fact, this is just the beginning of one. Okay? Look, notice how this one, like, you see the big drop and it continues, and then a huge drop and it continues. So right here, the larger the drops that get recovered, the larger the upside. You understand? So that's why I don't really like playing shorts right here until it starts breaking major levels. Like, because this is the thing. You see this low right here? Once it breaks this low, I know for a fact this large rising wedge is complete. It's done for if it breaks this low, because at that point this rising wedge is no longer a rising wedge. It's broken. So once it breaks this level, you can expect shorts to attack. And so that's why I'm just not willing to play the downside. I'd rather just wait for this 6600 to break, because if that breaks, we're going to like somewhere around here, maybe even here. Yeah, there's a gap right here at 61. So there's just, in my opinion, just no point in playing that, like this downside right here. Like, I don't care about it. Because what the market's telling me is there's potentially, let's see how large it is. What was I on the 1 hour? So from this new contract, 6640 to 6800, that's 160 points of upside that we just grabbed. So we could probably expect 160 points of upside from here. Why here? Because if you notice, this top was very strange. They created the top and ranged it. Why would they range it right here? Because in my opinion, it's a major pivot. So 6750 pivot. So if I added 160 points to this, we'd be at what, 6900? It looks like, I just like how that fits. So I'm looking for 6900 off of this pattern starting in what, 912. Yeah, sounds about right. But yeah, go check out the old videos if you haven't seen them. This is just a continuation of the old videos. If you look at these are just levels that have yet to be hit. They'll probably be important later. I left them on my chart just because they never got hit. They tend to get hit later, so I'll just leave them there. Essentially, this is where I expect the bulls to reload at. Um, and it's just a good visual target for me when we do start seeing some downside. But yeah, this is starting. If we can push a little higher from here, this is starting to look like a runaway. Um, and that's not too crazy for what the market's providing us. I heard the Fed's gonna print $1 trillion by the end of the year if we get our rate cuts, and then Trump's BBB money starts hitting in January, so there's a lot of liquidity that could potentially enter the market very soon. And yeah, it could fuel a ridiculous rally for I would I wouldn't say no reason, but a lot of people are going to think it's for no reason. A lot of people miss the liquidity side of trading. And it's because that side is the hardest to understand. It's pretty generic, but it's hard to quantify it, right? It's very tough to quantify it. And it's tough to outweigh the benefits and the risk of adding liquidity. Uh, because on one side, you're adding liquidity, but on the other side, you're diluting everything. So it's a very strange dynamic. But, in my opinion, the dilution of the dollar is enough for me to just stay risk on in the market. But yeah, other than that, it like you see this, you see how they're starting to round it off. So this is most likely a trap or a reload to destroy all these longs. So in futures, like let's say this was going to be a 70-point day. They hate when people get in early. So what they're going to try to do is they're going to try to shake all these kids out. And to be honest, this high should hold and we should double bottom first to go higher. But like I said, I think we might just do the three-peat, you know, the this one. I think we're just gonna do the little three-peat thing. Um, but these are all just little fractals. Like the three-peat is a larger fractal. The rounding that I was just talking about, this is just on a smaller frame. So, you can't really base your trading on these tiny time frames, but this is where, in my opinion, all the money's at. If you can get good at these small time frame trades, because essentially, like me taking the longs right here, this was a small time frame trade just because I saw the gap up and then I saw them hold the gap up. So boom, get in, liquidation event, consolidation, liquidation event, consolidation. This should hold and we should see another liquidation event higher. But if it doesn't hold and they start to round it, it's because they're trying to shake all these guys out, because they also saw what I saw. They saw the low hold and they went long. But yeah, man, as far as trading goes, like I said, I'm just expecting a little 6,800 consolidate back to 6,750 and then launch from there, maybe 67.15. So market open's probably going to be relatively red, but I think we should see some early high side. But ultimately, I think